Hey, what's up, beautiful people? Today we're going to be breaking down the price action on ES, and the setup that we're going to be breaking down specifically is something out of ICT's 2022 mentorship. So a lot of you that follow me, you also follow him, and you're most likely, I know not all of you are, but a lot of you guys, I'm sure, are privy with his 2022 mentorship that he made and the setup that and the strategy that he shared in that mentorship. And a lot of you guys even trade it. A lot of you guys even use that in your own trading. So I thought it would make for a really good lesson today, since I personally didn't take any Forex trades today. It was a no trade day for me. I know, shocking, right? So I thought this would make for a very good breakdown, a really good learning lesson, because it was a very clean setup that I saw on this today. Really clean setup, and yep, it makes for a very nice study session. Okay, so we're going to start on the daily chart. Let's go to our daily chart, our higher time frame chart. Okay, so ES, something very interesting happened today, and I'm sure some of you that follow me, that you are familiar with my content, you already know what I'm on here. It's this. So what is that? What did I just mark right there? That is what we call a fair value gap. For any of you that are not familiar with the term fair value gap, just search my YouTube channel for fair value gap. I have several videos on it, right? So we have a fair value gap there, a bearish fair value gap there. That is in imbalance. It's an inefficiency in price. Price did not have a fair shot of being efficiently delivered within that portion of price. So what did price do this morning? Price drew up, tapped up into that imbalance, efficiently delivered a portion of that price action, and boom, the floor dropped on it. Things just tanking, and we're heading for this low right here right now. That's next to go. I mean, without a doubt. Well, I'm not going to say without a doubt, but there's like a 90% chance that that's what's going to get taken here. So just a beautiful, beautiful reaction off of that level, off of that fair value gap. So now we're going to go down to our intraday chart, and we're going to break that down. So this is a 4-hour chart. This is that daily bearish fair value gap, just displayed on a 4-hour chart now. Do we got anything else interesting in here? It's kind of the same deal, but we do have this swing level right here. See that swing high level? What do we know is resting above swing high levels? Buy stops, buy side liquidity. Okay, so price did what? Price did what today? It pushed up, took out those buy stops right there, and pushed up into a daily imbalance. That's bearish. That's very bearish. So that's what we did on the 4-hour chart. We took out those buy stops that buy side liquidity. And if you remember from ICT's mentorship, what was the criteria? If I recall correctly, it's been a while since I've watched it, but I'm almost certain the main example he was using was on like the 15-minute, but it's the same deal here. It's just a larger sum of buy stops. So we have this 4-hour level right here. Boom, it purchased it, trades up into that imbalance. Right here on the 1 hour, we're on the 1-hour chart now, same deal. There's that high that got taken out. We sweep those buy stops, traded up into that imbalance, right? Then 15-minute, same deal. There it is displayed on a 15-minute chart now. Same exact deal. We took out, also it's worth noting that those buy stops, what else was that? That was previous day's highs. That's a key liquidity pool. That's a major significant liquidity pool. Previous day's highs and previous day's lows are significant liquidity pools. So price pressed up this morning right here with a really strong move, aka a fake move to the upside, aka a Judas swing to the upside, to take out these buy stops, aka previous day's highs, pushed up into a higher time frame bearish fair value gap imbalance. So you kind of see how all this stuff is starting to connect together here. We having many pieces to the puzzle starting to get put together. So we have all these things lining up here. Took that out. We have bulls on the wrong side of the market here on that fake run higher. Also remember that lesson that I gave you recently. One of the most common times for a Judas swing is 9:30 equity open. Many times, again, for any of you that were not privy to this is one for the notes for you to take note on. It's a really, really important thing to note down here is many times at 9:30 equity open, the open and move is many times the false move. It is the fake move. It is your Judas swing. Okay, meaning that move that you see many times at 9:30 is in the opposing direction of where price really intends on going. It's the fake direction. Okay, it's the fake out breakout, right? That's what we saw happen here this morning. See that big push up right here? I mean, if you're looking at this in real time, you're seeing these big candles forming, these big green candles, like boom, 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 boom. I mean, one after another, you're just ripping up, ripping up, ripping up. It's looking very bullish, especially if you're like zoned in on your smaller time frame. It's looking really bullish. Breakout traders, I see it taking out these highs right here. If you've studied breakout trading before, you know what they're thinking. Ooh, there's a breakout. Let's look for higher prices. Nope, it was just a stop run. It was just a liquidity run up into a higher time frame imbalance. That's why it's important to keep an eye on those higher time frame charts. And what happens? What's the next criteria we look for after we get a liquidity run? We go down to our lower time frame. Okay. So what did he recommend? What did ICT? What was his advice after the stop run? You utilize your lower time frames, so like your 5 minute, 3, 2, 1 minute. You go down your time frames and then you look for that what? Look for that fair value gap confirmation, okay, with that shift in market structure. So here was that push up. We were pushing up really strong here, pushing up, really strong market structure, 100% bullish in here. And then boom, you get a nice big displacement to the downside. Well, not really a big displacement, but still a fairly strong displacement to the downside. And did we break a swing low? We sure did. See right there, lowest low in the middle, with a higher low on the left and a higher low on the right. Lowest low in the middle, higher low on the left, higher low on the right. Let's note it for you so you can see it. There is that 5 minute swing low level that was broken right there. Follow my cursor. Right there. Price, see how price came down? Boom, broke that level. Left your fair value gap displacement. Remember, all this occurred when? After that liquidity run, after we tapped up into that imbalance. Okay, everything is pointing to the downside, and now we have our lower time frame confirmation, right? So we had that there was some move up into the imbalance, taking liquidity, boom, move lower, shift in structure, fair value gap left. What's next? What do we want next after that? Answer among yourselves real quick before I give you the answer. We want to move up into a premium market. It's bearish. At this point, it's bearish. We've had that shift. It's bearish, 100%. But where do we want to enter? Do we want to enter in a discount? Because this is a discount where it moved down right here on the 5 minute chart. On the 5 minute chart, when we broke that swing low level, price was in a short term, within a short term discount. Do we want to enter in a discount? No, we want to enter in a premium. So we want price to trade back up above 50% equilibrium of this 5 minute price range. Because above 50% equilibrium, that is when we enter a premium marketplace, right? So let's take this high right here prior to that displacement lower. You're gonna take it to that swing low. Looks kind of messy in here, but right here, if you follow my cursor, that's 50% equilibrium. So as soon as we popped above that, boom, you're good. You're in a premium. Once you pop above 50%, premium means expensive. Again, premium means expensive. We want to be shorting when something is expensive because this is a bearish scenario. This is bearish. So we want to be shorting in a premium, aka an expensive marketplace. We don't want to short something when it's at short-term cheap, right? So it trades back up into a premium right here. That's where you want to be hunting for those shorts. Where would your stop be? Could have put it above this high if you want to be a little bit more, give it a little bit more wiggle room, but this high would have been ample as well, right there, right above that fair value gap high. That's where you would have risked it, okay? So it traced up into a premium, and where's your target now? Okay, we've established the reason for getting in. Okay, again, we took those buy stops, aka that swing level, aka yesterday's highs. We popped up into a daily bearish fair value gap imbalance, and then we had our smaller time frame shift in market structure. We got on the 5 minute chart. There's no need to go any lower than that now. We got on the 5 minute chart. There's no need to go to a 4, 3, 2, 1 minute. We got it here, play it here. What's next? For like, how do we find our PT though? Like how do we come to that conclusion? Like, what do we do for PT? Well, there's like no one set correct way when it comes to PTs. Some of us, we like to take profits really quick. We like to get out of there, get that money, run. Some of us like to let profits run a little bit more. Maybe some of you like to take partials. Maybe you like to just scale out of your positions and just let this thing run like it is right now. Maybe that's your style. So I can't say that there's one way, but here are the different ways that you could have played this, okay? So we have a deal in range right here. If we were to take this low prior to that really strong push up, that's a deal in range right there. Follow my cursor. That's a deal in range. That big push up, okay? Overall, it's bearish, but this is your short-term deal in range, right? So let's measure that. Same thing we did there with premium and discount. A good place to look for, at least take a partial out. You can take everything if you want. There's nothing wrong with that. But at least take a partial or something once you come down into back down into a short-term discount. What you're going to do is you're going to identify a key liquidity pool in a short-term discount. So remember, we had our entry when price pulled up right here back into a premium. Boom, we're short. We're looking for lower prices. Okay, what key liquidity pool is right below a discount? I measured this price range. There's 50% equilibrium. Follow my cursor. Look at what is right there. What is that? Those are relative equal lows. See those two lows right there? 1, 2. Relative equal lows. Relative equal lows, very clean levels like that. They usually don't get left like that for long, especially when you have everything in conjunction like we have here. They usually don't get left like that for long. That would be a good PT. Okay, if you're a scalper and you're content with that, you could take everything off right there, be done with it. There's nothing wrong with that at all. There's nothing wrong with scalping. Or if you want to leave something on to catch this big move right here, which I'm sure many of you are salivating over, there's nothing wrong with that at all either. There's just different styles, different ways to trade the market. But I would definitely recommend taking something off right here, at least in this area. Then maybe take some more off as it comes down into this fair value gap right here. See that? What's another key liquidity pool? Low of day. What did we just talk about earlier in this video? What are very significant key liquidity pools? Yesterday's highs, yesterday's lows, but also high of day, low of day. High of day, low of day. This was low of day, right? This was the absolute low right before we had that big rally up higher. There are sell stops resting beneath this level. That is another very good place to take something off. Or if you wanted to, you could take everything off right there. Be content with it. Nothing wrong with that. That was a good place to take profits. That was a good place to take profits. That was a good place to take profits. And where are we heading for next, like I just pointed out a second ago? Right there, and you could possibly take off everything right there if that's your thing, if that's what you want to do. After we take out this big buy side or this big sell side liquidity pool, this daily swing level. So yep, one last time just to make sure I got it through your brain. What this setup was, daily chart. Today we traded up into a bearish imbalance. That's bearish. That's very bearish. When we tap up and we efficiently deliver that price action, that's bearish. Okay, it was serving as a draw on liquidity beforehand, before price popped up into it. But then price popped up into it, and it also took out these sell stops right here, or not sell stops, took out these buy stops right here. So we took out these buy stops, we pressed up into that fair value gap. Remember what ICT talked about in his series? You go to your 15-minute chart, you look for that key liquidity pool. Here's your key liquidity pool. Took out those stops, trade up into your higher time frame imbalance. Now what do? 5-minute chart, displacement lower. Okay, remember 930 equity open. Many times that's where you'll get your fake run. We got that fake run right up into that imbalance, followed by a displacement. You get a retracement back up into a premium because we want to be entering on a premium above 50% equilibrium. We have our stop above this high, and we have these possible targets down below depending on how you want to play it. Again, there's no correct way. It's just the way that works for you. Which way do you want to do it? Are you a scalper or are you more aggressive with your profit targets? If you enjoyed this video, make sure you leave a like, you subscribe to the channel. And also one more thing, if you're not in my Discord chat, I highly recommend you join that Discord chat. Tons of traders in there that you can connect with, tons of educational material in there that you can consume. 100% free. There's no catch. You just click the link, you join, you're in, and you can share your ideas with us.